What's up, everybody? Michael Silva here to do some technical analysis on the SPX, the S&P 500 index. We're going to look at the daily time frame and the 30-minute time frame. We're going to talk about what took place today, map out some support, resistance, and then kind of get a good idea as to where this market is heading next. Let's get into it. All right, welcome back. We are looking at the daily time frame of the S&P 500 index. This red rectangle up here is the bears camp. That is a zone of resistance. Then we have the green one down here, the bulls camp, an area of support. Let's zoom in on today's price action. And well, what do you know? The bears stepped up big today, pushing the bulls almost outside of their camp. Today just broke a 7-day green streak, having a pretty significant red day, engulfing the previous 2 trading days candles. Tuesdays are known on Wall Street as turnaround Tuesdays. So we had this 7-day winning streak and we saw a pullback. Is this pullback going to continue? Are we going to see more downwards pressure? It's possible. We're going to talk more about that on the 30-minute time frame, and we're also going to bring up the Federal Reserve chart of the 10-year bond minus the 2-year constant maturity and show you how they compare. I did this on a previous video. I'm going to put the link in the description below, and I'm just going to quickly touch on that today. So this current candle pattern that we are seeing, this bearish engulfing, can mean that we might start seeing a reversal to the downside. Now, we've been saying this is the buy the dip, sell the rip type of market. So we need to find out where this dip might actually pull back to if it decides to continue. First area is this purple trend line. We're going to map out some support and resistance areas as well. 3,200 seems to be the floor at this particular point in time. The 50-period moving average is sloping up nicely up into that area, so that's going to offer up support. Then you had the previous price action here at 3,200 as support, and then it resisted over here, and then acted as support and resistance in this area too that we called the island reversal pattern back here in June. Now, is there any other level that this might have some interaction with on the way down to that 3,200 if it were to go down? The level that I see is right here at 3,280. Why do I call that 3,280 an area of support? Well, simply because you can see that there was a couple of weeks of price action trading within that type of channel, and it was getting held up here, and then when it broke above, we saw that squeeze to the upside into that bears camp. So if we do get a continuation to the downside and maybe break below this trend line, we might see a continuation to there. If we get a break below there, my eye is on that 3,200 level for a pullback. Now, I mentioned I'm going to bring up the chart that I mentioned in a previous video. I'm going to have it linked in the description once again. It has to do with the 10-year minus the 2-year constant maturity rate on the bonds compared to the S&P 500. So here is a chart. Now, in the video that I mentioned that's in the description, I go more into detail and show you the history of it and why I brought it up in the first place. And why I'm bringing it up now is simply because, as you can see back here in early 2020, when the S&P 500, this red line, starts moving higher, at the same time you see the bond go down, it's giving us somewhat of a heads up notice saying, hey, the market might snap back eventually. So you see the 10-year bond go, the S&P 500, and then you see this retracement where the S&P 500 snaps back one way, and then you see the bond snap back the opposite, kind of closes the mouth. I heard somebody in the comment section say the alligator's mouth. So the alligator's mouth opens up and then it snaps back close. And now in more recent trading days here in July, we start seeing the S&P 500 and the 10-year bond really start spreading out again, opening the mouth. Now, if we go to the 10-year Treasury chart, now you can look at the 10-year minus the 2-year. Now, the chart hasn't been fully updated on the Fed website yet, but I will post a link for that chart that I just showed you in the link in the description below. But the 10-year, which I like looking at, the 10-year broke this level of support, this 0.60 that we're keeping an eye on. I said, hey, it looks like I'll be trying to keep an eye down to the 50 level. That looks like an area that it might fall down to. It fell down to that area, but ultimately we said we'd have to see multiple closes, and then we'd have to see the 0.60 level act as a level of resistance after it is broken. Clearly today, this is a huge day in the bond market, up almost 11%, crashed in that 50 period moving average. Looks like it wants to head higher, especially if we get a close above that. When I throw up a trend line like this, it was trading in somewhat of a tight channel and it broke above it. Some might call this a falling wedge. I can see why, or just call it a channel, a bearish channel. We broke to the upside. So what we're going to see is the 10-year bond start closing its mouth in, and then we're going to see the S&P 500, which we saw today, start to fall. So is this an early warning sign that we're going to start seeing money flow into the bond market, where we start seeing higher yields, and then we start seeing the S&P 500 with a little bit more of a pullback than we previously expected? Me personally, looking at this chart, it is in very bullish context. So how far of a dramatic pullback could that potentially be if it were to come? My eyes, like I said, is looking at 3280 and 3200. There is an extreme floor down here at 3000, but I don't necessarily need to talk about that right now just because it's not quite in play at this particular point in time. Can that change? Obviously, yes, of course it could change. The market has been pushing higher to this 3400. It looks like the market does want to test it. Will it get there? I personally think that yes, it will eventually get there, but we're going to see pullbacks along the way. I mean, that's what the market's been doing. We've been having run-ups, pullbacks, run-up, pullback, run-up, pullback, run-up, pullback, run-up. Might see the pullback here. Today had some very interesting news throughout the day as well. Russia came out saying that they do have a vaccine on the coronavirus, and it's been used apparently on Putin's daughter. There was also news around Biden announcing who his runner-up is, and I believe that's Kamala Harris. We had large price declines in gold and in silver, which I'm going to be posting those technical analysis videos today as well. If they're already up, I'll put the link in the description for you. Tesla announced that it's going to be doing a 5-for-1 split, and then also what people have been saying, this last pull down right here throughout the last hour of the day, which we'll get into the 30-minute time frame, had to do with the tech sector really taking a hit towards the end of the day. All right, let's hop into the 30-minute time frame to get a good sense of direction where this market is heading. All right, so we are looking at the 30-minute time frame. This blue vertical line going down the screen represents where the day started, and every candle thereafter represents 30 minutes of data. Now, as far as the green and red lines go, those were areas of support we mapped out and resistance that we mapped out the previous day. So what took place the first hour of trading? Well, look at these two candles. They kind of contradict one another, more indecision, very similar to what we saw yesterday take place. You had an inverted hammer candle on a gap up, and then you had a hammer candle the next 30 minutes. Same thing here, inverted hammer candle, and then this candle. And on yesterday's trading video, I said, if you get a break to the upside and a close above it, you can trade into that momentum. Well, if you see, the day started moving, but it didn't quite, it closed above it, but we did not see the momentum continue to the upside. And then if we broke back down, you would have got stopped up on that type of trade. As far as the area of resistance that we mapped out was 33.75. That level did hold as resistance throughout this trading day. When it did break above it, it acted as somewhat of a support here for an hour and a half, but ultimately the price could not break that 33.80 level. So we got pushed back down to this level of support, 33.62, which we mapped out from the previous trading day. And then when we really got below this hammer candle right here, that's when the momentum started really picking up to the downside. A little bit of chop here and there. We pulled down, we moved up, and then we brought back down. So these levels got just beat up completely. What we're going to do now is adjust our support and resistance levels to map out where the price might be heading tomorrow. So I'm going to go ahead and remove the resistance from 33.80. That's still a valid area of resistance, but just to clean up the chart, I'm going to go ahead and remove that. As far as support goes, that's the entrance into the bears camp. I'm going to go ahead and just make it 33.30. So that is where the entrance to the bears camp is. Technically, it's a little bit lower, or this candle pulled down to 33.26, but I'm just going to make it round by saying 33.30. That was acting as a level of support today as well, and then in previous trading days, you can see too. As far as resistance goes, this 33.50, I'm going to make it 33.50. I'm going to call that an area of resistance. And the reason why is simply because you can see, it was just right up here, so I'm just going to make it more round, but there was a lot of price action and price history from the previous trading day that acted as support and then also resistance as well. So it acted as resistance right over here, resistance here, and then also support within this range. So another thing that I want to call out is that the 50 period moving average, we closed below that, and that can act as a level of support and resistance depending on where the price action is. Right now, the price action is below the 50 period moving average, so that can act as a level of resistance. And if the price tomorrow opens up within this range or below the 50 period moving average, the 50 period moving average will continue to slope down to that 33.50 level. The next level of resistance is going to be exactly right here, the 33.60. Technically, you can make it a little bit higher at 33.63, but just for rounding purposes, I'm going to make it 33.60. And clearly, the reason why I'm doing that is because it acted as support today, basically a couple of times with this hammer candle and this hammer candle almost touching perfectly. Then it acted as resistance right through this range as well. So heading in tomorrow, we have 33.60, 33.50 as our levels of resistance. We have the 33.30, which is the entrance into the bulls camp, as a level of support. And then if we want to pick out one more area of support, keep a close eye watching this 33.17 level and potentially even lower where this gap window was at 33.06. You can call it 33.05 or 3300. That's totally fine. I can see why if we scroll back into the history. That was what we called the caterpillar pattern, right? We had the dual caterpillar pattern right here, one caterpillar, two caterpillar, and then technically we had a little baby caterpillars right there. And then we said when they go into their cocoon, they hang upside down, and what we're getting right now is a hang up upside down. So depends on how long they're going to be in this cocoon for to potentially see more of a move to the upside. So I'm just going to go ahead and draw those levels out so you can see them. You can use this trend line as the first level, and then for the second level, we'll just make it right down here at 33.03. And like I said, you can make it 3300. That's totally fine if you want to make it more round as well, but we'll just have it right there for this particular point in time. So that is what we have. We have some support and resistance levels to keep an eye on heading into tomorrow. Will the bearish action continue? Well, it just depends on where the market really opens up. If we do open below this 33.30, I would expect these levels right here to act as some version of support. But if we get continuation to the downside, keep your eye on 3200. We might not reach it tomorrow, but if the market does decide to pull down to that range, would be a good opportunity for a great risk versus reward trade. That's all I have for you on today's S&P 500 technical analysis video. See you later.